Hi, I'm Don DeLoach, President and CEO of Aleri. I'm going to talk for just a couple of minutes here today about liquidity management and the role that Aleri has played in evolving holistic liquidity management capability in the markets. I'm going to touch on our relationship with Wall Street systems, and finally, I'll talk a little bit at the end about the implications of the global liquidity crisis and the overall global financial crisis. Aleri first pioneered a global holistic liquidity management system through our joint development with Barclays. Barclays was a clear pioneer in this area, and we worked together with them to develop a holistic liquidity management system that would stripe across various silos, the various payment systems across the bank, in order to gain a holistic view of the liquidity positions on an intraday basis. Moreover, as we evolved this system, the requirements of the system spoke to the need to begin to model predictively the behavior of clients and better understand the nature in which liquidity changed on a day-to-day, hour-by-hour basis. This system was a tremendous success, and Aleri subsequently sold this to several other banks. In doing so, we built out the capability to do things like payment flow control, where not only would the bank gain an overall understanding of the positions across the bank, but actually be able to send instructions to the various payment systems as required by those systems based on the holistic view and a need to optimize that liquidity. Other modules we've added involve collateral management, behavioral analysis, and a few other capabilities in terms of modeling and optimizing liquidity across the bank. It's interesting to note that the enabling technology that makes this possible is Aleri's complex event processing. Complex event processing is fundamentally a horizontal technology, but it's designed for an event-driven architecture that is basically architected to allow for very, very high volumes of fast-moving data to be processed in real time. And so in the case of liquidity management, the Aleri complex event processing system stripes across the various payment silos, takes information in from outside of the bank, like real-time RTGS information, and processes that in a way that allows for the bank to absorb, normalize, analyze, and aggregate that information in order to maintain this view. Now, recently, Aleri has formed a tighter relationship with Wall Street systems, and Wall Street is a clear leader in treasury systems throughout the world. We were delighted to have this relationship, and it's one that we think will be beneficial to both. The Aleri liquidity management system is a great complement to the wonderful systems that Wall Street has provided to their customers, and we think that this will be a superlative offering in conjunction with the Wall Street solutions that are already in the market. So we're teaming with them to bring this capability really globally to both the Aleri customers and to the Wall Street customers, and we think that that customer base will grow to everybody's benefit. The last thing I want to talk about is the global financial crisis and what precipitated that, or moreover, the relationship between that and liquidity management. Now, if you'll remember, back in August of 2007, we saw the first bump in the road, if you will, when the commercial paper market virtually imploded and the interbank lending market froze. At that point in time, I think many banks began to realize that the stress testing they were doing that was based on the balance sheet and academic modeling was fundamentally flawed. The assumptions that were underlying the stress testing were invalid, and in fact, there was a need for greater clarity around the exact positions of the bank at the time of the event. There was a bank in Europe that was familiar with what we were doing with our liquidity management system and had the thesis that if they could gain the depth of knowledge that existed with the operational data resident in a holistic liquidity management system like we offer, you could then add to that some of the underlying assumptions that you would build into a balance sheet based model, but then have the flexibility to stress test against operational data that would give you a much more accurate portrayal of the risks associated with liquidity and a much better comfort level in terms of modeling that risk. So a prototype was done last fall. we concluded that in fact the thesis was correct, and this could be a very, very thorough and innovative way to manage liquidity risk. And as a result, Aleri began to build the prototype for what we call our low RAM product. Low RAM stands for Liquidity Operational Risk Analysis Module. This basically allows you to, as I said, model your liquidity risk fundamentally driven by the operational data within the system. This capability will be in beta test at the beginning of the year, and the plans are to move forward with this with general availability sometime in late Q1 or early Q2 of next year. This is really an innovative approach to liquidity stress testing and managing overall liquidity risk. The holistic offering of Aleri's liquidity management system offers an unparalleled capability in terms of managing, monitoring, and optimizing liquidity across a bank. We've had, again, tremendous success with this. Our customers are extremely successful with their use of this capability. We continue to evolve this capability, and now we're delighted to continue to do that in a broader fashion with the partnership with Wall Street Systems. We hope you visit our website, learn more about this, or call us directly at Aleri or Wall Street Systems. Thank you.